This is going to be a strategy video, pretty much explaining what strategy I'm using. The strategy that I'm using is liquidity supply and demand, which is originated by RD Concepts and Mango. I'm going to be showing you the 5 minute. There's also a 30-minute time frame as well. That's going to be based on the part 2 that I'm also going to be releasing. First thing, I'm going to quickly show you a basic picture of what we're trying to look at. Let's say we're creating an uptrend with higher highs and higher lows right now. So what we are going to be looking for is price creating a demand zone right here. Within this demand zone, we also want to see price essentially coming down, creating a form of liquidity, going up, so it's untapped, and then comes back down to our zone. That's a basic, simple way to put the strategy. Pretty much creating a level of liquidity right here, giving us a break of structure. So price comes, creates a level of liquidity, breaking the structure, and then coming straight back down to the zone. That's literally the strategy. And I'm going to be showing you many different ways of taking the trade because there's different entry criteria as well. First thing first, I said an uptrend. So if you want to follow the trend, your win rate also gets higher as well on the 5 minute, essentially. On the 30-minute, you always have to follow the trend. And then it's the same thing for a downtrend as well. I'm going to be showing you some examples real quick. So this is a trade on gold. You can see how price wasn't really creating any trend. It was kind of back and forth. The only thing we could see that it was creating is these high lows. You can see right here, it was creating these high lows. Which is kind of a sign already. It is a sign as it shows bullish market structure already. However, it was failing to break these highs right here. We saw price coming down here, giving us a nice demand zone right here. And then price came, created a level of liquidity, broke the structure, still creating another break of structure, and then price coming straight down, which we call a straight line movement to the zone. And essentially, based on that information, we pretty much always aim for 1 to 2 TP. I'm gonna show you entry criteria as well, but for now I'm gonna show you the basics of the trade, of taking these trades. This is one example right here. I'm gonna show some more examples as well. This is another example on GBP CAD. We can see how price has literally been going down for quite a while. And then we can see price giving a retracement. As you know, price doesn't carry on going down. In order for price to move, obviously it needs to breathe, it needs to retrace. And in this case, that's what it did. Price was going down very, very, very impulsively. Then came back up, giving a retracement. And I entered on this supply zone right here. You can see how this liquidity formed right here. You can see how there's a break of structure right here. Liquidity formed, came here, broke structure, even broke structure here as well, if you want to count that. So, and then price came all the way up. It wasn't a straight line movement, therefore I went for 1 to 4. Got a nice candle closure entry. It was so close to stopping me out, but it was just retesting the zone. Again, that's kind of common as well. Price does sometimes want to retest it for the second time and then carry on going down. And then that's another example of how it's TP. I'm going to show you some losses as well. This is an example of a loss. You can clearly see how price created a supply, right? It's big push downwards. And then you can see how it created liquidity, valid liquidity for us, created nice break of structure. Price came straight up for a straight line movement. I should be going for 1 to 2 here, which I think I did. I'm not sure. You can see I've got my entry right here. Candle closure, typical entry. you can see what literally happened. It just took me out, went exactly straight down to my TP. It's very unfortunate, but losses, I wanted to show that losses do happen. I don't want to just show the winning trades, not be transparent and not showing you the losing trades as well, just so you know that, of course, losses are part of it. I'm going to show you some of the few examples too. One thing to notice about this trade is that the fact that it was downtrending as well. You can see the trend was also aligned as well. And in the 5 minute, normally when we're looking to enter, we're not looking for to catch some big move. We're only looking to catch a small move in the 5 minute market, as price in the higher time frame tends to retrace, and in those retracements is where we catch our trades pretty much. I'm going to show you more examples. See, this is technically a trade that is technically valid, but the reason why I wouldn't be taking this trade necessarily is because of the fact that it was weak. We can see how price was quite choppy, right? But it was still creating some bullish structure. However, the price was not moving normally. Not only that, the way price just wicked this area out, just wicked it out, was not ideal. It didn't break structure clearly, and this was a very choppy condition clearly on GBP guide. Liquidity was very close, way too close to the zone, way too close. So I didn't take this. Yes, it did win, but this is what I mean. You can't be taking any and every trade expecting it to essentially be correct, because even trades like this, you can get rewarded, but you're not really following the plan, are you? So this is why you got to be very careful with the trades you're taking. I just wanted to show you an example like this so you know how markets, even bad condition markets, can reward you or you could lose. Now I'm going to show you some entry criteria. With this trade that previously took, I showed you that took a standard entry, which is pretty much a candle closure with a red candle closure for supply is a standard entry. This is the type of entry you would take if there is no 15-minute flip or no 1 hour flip or 30-minute flip, etc. If this was just a 5-minute candle or there's no 15-minute or 1 hour, this is the entry you would take. In this case, I did take a 5-minute candle closure. As you can clearly see, it's 155. There was no 15-minute candle, so this was like a standard entry. I'm going to show you some other entries that I've used. This was a standard 15-minute flip that you could pretty much take. You can see how price is continuing down. This was like a continuation move to the downside. You can see the trend clearly forming lower highs and lower lows right here. And then you can see how it created a nice supply with valid liquidity and a break of structure to the downside. Then price going up, still wasn't a straight line move. Then a valid 15-minute flip would be the entry right here. Looking for a 1 to 4 standard TP again, unless it was a full straight line, then I'll be looking for 1 to 2. When it comes to the 15-minute flip, what I'm looking for is price, first of all, to tap the zone, okay? And it shouldn't be closing inside the zone, of course, or else it will be invalid for any type of trade you take. And then a new candle is going to be formed. When a new candle is formed in the 15-minute, most of the 15-minute candles have a bottom wick and a top wick. Some of them don't. Not every candle is going to have it. However, majority of them you can see clearly has a top wick and a bottom wick. So what we're looking for is when the 15-minute candle opens, we're looking for it to create a top wick, and then as soon as it flips from, so in this case, let's say it was green here, as soon as it flips from green to red, of course, because we're looking for supplies, we enter. We enter immediately with the stop loss, of course, being above, which we can see in the 5-minute, if I go to the 5-minute. So pretty much this is what we're looking for. Stops above this wick. So if price comes and takes us out, then of course it's invalid. So stops above here, looking for 1 to 4, and then we enter, pretty much. That's what we do for 15-minute candle flip, and it's essentially the same for the 30-minute too. There is not much difference for the 15 and the 30-minute. It's the same way. One other entry criteria is also a break of candle. You can see how this was a green candle, gave us a nice rejection. Next candle was red, and it gave us an entry, right? So in this case, what you would want to see is price to break this previous candle, and that's what it would be. So your entry would be right here. Essentially, it's even a better entry in this case. Of course, I'm not showing an exact entry, like a trade that I took for exact entry, but in this case, we pretty much will be looking for this candle, break of this candle, and it would enter as soon as price breaks it. Those are the three ways we enter. One way is candle closure. In this case, candle closure right here. Second way is break of candle, and the third way is, of course, the 15-minute flip, which we saw right here. And then we look for TP124. This was a classic trade. Clearly, it went from 1 to 4, and yeah, pretty much. Those are the three entry criterias. And if you want a high win rate, you would want to make sure to take the trade with the trend. You can still take it without it. I've explained why. And for the 5-minute, this is literally about it. There are probably more trades I could show you as well. I want to explain something about liquidity right now. So for there to be valid liquidity, what you would want to see, I'm going to show you more clear. You would want to first see price come and not tap. Obviously, it should not tap. And then break these highs, go up, come back down, pretty much essentially taking liquidity. So in this case, you can see how there can be 1 candle liquidity, 2 candle liquidity, 3 candles, and so forth. In this case, there was 4 candle liquidity right here. You can see clearly there's 4 candles there coming down. This was liquidity, and this was there. There are different ways on where you want to take a trade. If you have more confluences to show that price is looking to come back to the demand or the supply, so for example, being in trend, breaking structure to the upside, which is showing that it's in trend. If you have confluences like that, then you could take trades with 1 candle liquidity, 2 candle liquidity. And you don't want to be taking those 1 candle, 2 candle liquidity if there isn't a clear breakdown of why you would want to take this trade. What I would say is, when you're trying to look for these trades, look at reasons why not to take it. If there are more reasons for you not to take the trade than to take the trade, do not take the trade, because you've got more reasons not to take the trade. But if there's reasons for you to take the trade more than not, then clearly you should take the trade. That's how I look at trades. That's about it with the 5-minute. There's not really much to explain like that. If you have any questions or anything, you can just tell me in the comments below, or you could text me on Instagram and I'll reply. That's about it. And I'm going to conclude this video. Part 2, I'm going to be showing a 30 minutes strategy, which obviously is the same strategy, but it's on the 30 minute. There's more rules to it. There are more like criteria towards it. And I'll tell you in the next video.